What's up? I'm Dan Fredenberg, and this is another chance encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are just kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. I'm joined today with Linda Holtz. How you doing today, Linda?
I'm doing great. How are you?
I'm fantastic because I managed to say Holtz instead of Hotz. That's like it's really small in the text there. It's like, but I got some even better news for you than that, Linda. Today we are joined by my very favorite member of the audience. And why is my favorite audience member here today? It's because this is a chance encounter where I interview commercial real estate syndicators, buyers, sellers, investors, sponsors, operators, all that kind of stuff. And you may ask yourself, why would you do that? And the answer is, if you've ever heard of an off-market deal, a private deal, or a 506B syndication, then you might want to know that the SEC requires that you have a documented prior substantive relationship, or else the SEC says they'll get ants in their pants, and you don't want that. But anyway, before we get too far into business, Linda, do you want to say a thing or two about yourself?
Sure, yeah. So I'm Linda. I'm an investor. I've been investing for a couple of years now. Property manager is my day job, which I like to say because it makes me feel like a superhero. And I guess real estate is my gig at night. So I'm kind of like Batman in training. And very excited to be here, originally from France. So if you hear a little bit of my accent, that's where it's from.
Right, exactly. It's funny because it's definitely an atypical French accent. It's really, really something. But the first segment that I always go through, it's the five distinct motivations. Before that, I gotta say, but wait, check your eight, Linda. I don't know if you know how to do this, but can you see through the camera and down in the user's device? There might be this hideous subscribe button, and it's horrible. They should just, okay, it's a stupid joke. Anyways, the five distinct motivations. I've spoken to hundreds, possibly even thousands of different investors and syndicators by this point. And one of the important things you need to find out before you take somebody on, even in a limited capacity, is what's going to make somebody stick around and see this project through. And everybody has their own unique why, but I found that they do fit pretty neatly in these five different categories, and it basically gives us a pretty workable answer as far as why is this person going to, like, it takes months to close one of these deals, it takes years for them to go full cycle, and so it has to be something with some staying power. So one type of person who's making another acquisition, especially these days, it's people who are looking to preserve their purchasing power. What on earth is that? Well, some people, they don't have a day job, they don't have a W-2, so the way that they pay their bills is from the proceeds of their portfolio of assets. And why would somebody in that situation make another acquisition if they don't even have to work? Well, if inflation rears its ugly head, that's going to eat away from the purchasing power of your cash flow. So that's one time you're going to want to make an acquisition. But the other time is when you can buy at a steep discount, like when the property's under distress or there's an asset crash due to perhaps interest rates going up. Sound familiar at all? But that's what some people are up to. I'm not that far in my journey. Where I'm focusing right now, it's due to the fact I'm in tech. And as a high wage, high salary earner, you really need to be thinking about this. The tech that I was involved in, I had a CRM agency for mass marketing since 2011, and I started doing that for real estate firms in 2014. And when I ended up getting back to Canada, I found that the tax burden was enormous. And being in real estate, you're getting rewarded in the form of deployed capital, aka equity. And the tax advantages of that make way more sense than pursuing a bigger and bigger salary. But that's too subtle for some people. But I'm not exactly surprised, but that's just me, right? Now, the next type of person, though, they're looking to take control of their schedule. And that might mean that they are hustling like crazy right now so that they can fast track their retirement. But in many cases, it's more that people want to work fewer months per year or fewer weeks per month or something like that. And that's what's attracting them to making these commercial acquisitions. Now, a lot of people think who are big proponents of this, they think everybody's like that, that they secretly want to retire. But I assure you that's not the case. For example, there are people that are fueled by ambition. They want to buy their entire hometown. They want to make sure that their great grandchildren never have to hold a day job. And that's fantastic because it means they're going to hustle into their 90s. They're going to stick around. They're going to see the things through. So it makes them great members of a GP team. So I don't want to alienate them, that's for sure. But the last group, they're similarly motivated, but the target is completely different. They've found a sector of society, or maybe it's animals, maybe it's the environment. Who knows? Maybe they want to send people to space. But regardless of what it is, there's a big financial component to that. And that's why some people are making these commercial acquisitions. So, Linda, of those 5 different motivations, what combination of those would you say describes you best?
Well, definitely time for wealth
Mm-hmm.
and fast track retirement. But I think that the helping people part is comes to me naturally because of what I'm doing. Day to day, my W-2 is in property management, which by definition, I help people preserve their investment, which usually is their only or at least their biggest investment. So that's definitely in the back of my mind. But as far as like the immediate motivation is definitely between fast track to retirement and trading time for wealth instead. Yeah, for sure.
I love that answer. That's bang on. And of course, that's if everything goes well. The fact is, you don't want to downplay the fact that there are risks involved, just like in any industry or business. And if you've ever been involved in one of these off-market deals, these 506B deals, whoever the securities attorney in the mix was, they should have insisted that everybody fill out this super invasive financial questionnaire. If there was no securities attorney involved in the deal that you're in, that's a huge red flag and you should run or report it. That's super duper bad. If something goes wrong, you're cooked. You have no representation. But anyway, I'm not a lawyer or a financial planner and stuff. I have to do the disclaimer. But anyway, when you're filling out this questionnaire, other than going like, wow, this is more information than I know about my parents. When I was going through the questionnaire, there was one question that really jumped out at me from my background as an educator, and then also building a bunch of quizzes and wizards online. And it was the risk assessment question. I felt that the options they gave, it didn't give me a clear indicator of the person's perception of risk. So I made my own, and it's a fill in the blanks question. And it is, there are many popular investment asset classes, but I think blank is too risky. So Linda, this can be inside real estate. It can be outside real estate. What's too risky for you?
Was too risky for me. Um, I don't know. Crypto is too risky for me. It's too
Mm-hmm.
volatile for me. Let's put it that way.
Mm-hmm, mm-hmm. And it's a pure appreciation move too, right? It's buy low, sell high, or else you lose. And of course, as we'll see in this next section, the favorite deal metrics. Yeah, math, woohoo! So let's give this one some background. Now, I'm aware that some people in real estate, they're more of a public relations, front of house marketing type of person. And that's going to be different from the actual underwriters that are sitting there with their faces in the Excel sheets and doing different stress tests during their underwriting. And one of the things that's going to happen universally, so regardless of where my guest fits fits in that range. There are going to be some metrics, some numbers that will be the top of the subject line sort of thing whenever they're speaking to people or if they're looking for a deal. And I want to make sure that if you ever work with my guest Linda, that you know what she looks at. So here we go. For everybody in the audience who's just listening and not watching, I'm going to read them out. The first one is cash on cash. Second one is IRR. Then cost per door. That's especially for multifamily. Most of my guests on this show are multifamily. But net operating income, NOI, is the next one. Going in cap rate. That would also be the difference between the local going in cap rate, the standard cap rate that's published versus what you're actually getting it at. The interest rate on the loan, if you're taking it over or you've secured for this operation, the occupancy rate, which is also the vacancy rate, the average income in the area where the property is located, the amortization period of the loan, the difference between the market versus in-place rent, the population growth in the area where it's located, the sponsor record. So that is the number of deals that have already gone full cycle and how many are on the go right now. Then the waterfall split or exit strategy, basically what's going to happen to your money after your capital is returned. And then the last one is DSRC, which is debt service coverage ratio. In other words, what percent of the rent, the revenue from rents and other amenities are going to debt right out of the gate. So Linda, on that list, what are the big headliners?
Well, it's quite interesting because the first two, I'm right here with cash on cash and IRR. To me, those are the two ones where it needs to be where I want it to be. And if it's under, unfortunately, you cannot close every deal. So if it's under, that's where I will pass on these two more than likely.
I love it. I love it. And of course, all those different reasons are very, very important. And of course, fundamentally, it makes it better than crypto because it's you're giving roofs over people's heads, and you can't eat crypto. It's not like a subscribe sandwich, which looks delicious, which is also my very subtle reminder that it's time to pull out the Dan Does Deals Commercial Core Competency Cube with the 6 different roles in a commercial real estate deal. And the purpose of this cube here is to make sure that you know the different roles in a deal. You can effectively communicate about those roles in a commercial real estate deal. And then you also understand how my guest fits in. And if you go, wow, I really wish I had one of those. Well, oddly enough, the Dan Does Deals Commercial Core Competency Cube is on dandoesdeals.com. There's a picture. You just click on it and you can download it. And like a complete dummy, I don't even ask for your email address. That's the cardinal sin of marketing. You never give your freebie away without some sort of contact information. But I want to make sure there's nothing in your way from getting this and practicing these different roles. And in every episode of Chance Encounters, I go through all 6 sides, and then that way you know how my guest fits in. So the first one is a repositioner. The repositioner might be the first person you ever meet in a commercial real estate. It might be a local, but a repositioner, we've got all these paperwork down here on the bottom and a bunch of different deals because they have to underwrite the deal. That's the fancy word for doing the math. They need to figure out, first of all, hey, is this property even making the amount of money that the seller/broker is claiming it is? Because okay. And what they're doing is they're trying to figure out how can I get this at a steep enough discount, on better and better terms. And so if you want the better terms, the repositioners all have a vast network of financiers. Those are people who are willing to lend money, basically get more liquidity for the deal to happen. And the financiers, they do not deal with any sort of asset management. They purely deal with paper and money and whoever's running the show at the property as far as the syndication team. But the real reason why that's going on is because if the repositioner can secure a more advantageous loan, boom, you've got it goes straight to the bottom line, the profitability of the building. So that's why the repositioners are talking to them. But of course, the more traditional way to find more upside, look at the operations and stop those Benjamins from going down the toilet. But of course, there's more to operations than just unclogging toilets and collecting rent and mowing lawns or shoveling snow where I am. But the other thing about operations is that if you're investing in properties with 100 units or more, which is my focus, then you're probably going to outsource to a third party property management company. So why do you need some guy like me from the internet? Well, one thing is the automation and the web assets that I provide. But the other big one that comes in is even if you are outsourcing to a third party, the enemy you have to realize is vacancy. If you've got empty units, they've got to be filled. And if the property management is not able to do that, somebody with real marketing chops has to be able to step in and get those units filled. So that's what I'm bringing to the table. But of course, there's only so much you can do with operations to optimize. So the next place the repositioner is going to look is the contractor team to upgrade the property, to make the units nicer. And then that way, the future residents will be happy to pay more in rent than the previous ones. But of course, if only it were that simple. You can spend endless amounts of money on contractors. You can go ahead and gold plate the toilets, but the name of the game is return on investment. So how do you make sure that the contractors aren't dragging their heels and they aren't using sub-adequate materials? Well, if you're like me, and as I said before, I don't know if you get it, but I'm from the internet. It means I need locals. I need boots on the ground. I need somebody who can be there in an hour or two, because that can't be me. I'd be stuck at an airport in an hour or two, push comes to shove. So you need those locals, or else you don't know if your contractors and your operations are actually doing their jobs. But when the repositioner, maybe if you become a repositioner, let's say you're an engineer or a physician or an attorney, something like that, and you get the idea in your head, hey, I bet you if my friends and I pooled our resources, put in 100K or 250K each, we could take over that 350 unit apartment complex down the road. Well, when you as a repositioner turn around to the financiers and say something to the tune of, okay, it's like this. We got a 350 unit apartment complex. It's tens of millions of dollars. Want to lend us tens of millions of dollars? Okay. Well, the problem the financier is going to have, and if you have some sort of guru or mentorship program going on, you want to pay close attention to this part because they usually really gloss over this part. The financiers, in other words, the bank, is going to say, who's your KP? Who's your sponsor? What's that all about? Well, with that little hypothetical where you're pooling your resources to get the earnest money deposit, or at least the down payment to take over the building, to be eligible for a commercial loan, somebody in the fold has to already own a similar asset. Okay, so if you want to take over a 350 unit apartment complex, somebody in the fold has to already own a 350 unit apartment complex. And on top of that, among the GP team, you're going to have to put together a certain amount of liquidity. And then among the GP team, you need a balance sheet of at least the amount of the loan. But if you got all those pieces, you got yourself a commercial real estate deal. So, Linda, as far as these 6 different roles there, I get that like everybody is some degree of a repositioner, everybody has some sort of financier relations. But what boxes do you really check or expect to check on your next deal?
Operations, that's me. Of
Right, yeah.
course, I can be local, by the way. I invest in Houston, Texas. So if anybody is out there in my backyard, please feel free to reach out because I can be boots on the ground here. I can be looking at deals here. I have a little bit of underwriter, so definitely some drops of repositioner. But at the same time, the bread and butter is operations for sure.
I love it. I love it. So great. And that brings me over to the ideal property. And when real estate people are asking each other, hey, what you looking for? What's your buy box? What's easier to say yes to and more difficult to say no to? We're asking about 3 things. The first one's geography. Where is it? It matters. Okay. We're talking which state. We're talking which county and possibly even which neighborhood. Okay. It's going to matter before they call it ideal. Now, the second
Mhm.
one is the size. And when you're talking about apartment complexes, because most of my guests on this show are multifamily apartment investors, we define size by the unit count, which is the number of apartments. And the reason why it's vitally important for us to know this is because you've got a completely different type of team doing JVs and whatnot on 15 unit apartment complexes compared to the ones that are syndicating 150 unit apartment complexes and up. Okay, so the size is definitely going to matter. Now, the third one, it's usually called class, but I like to call it the desirability. And the reason for that is because it's split into two parts where it doesn't really make any sense if you call it class. And those are the condition and the area. And so if you're talking about the condition, then we're talking about how old is the building, how beat up is the building, and then as far as luxuries and amenities, are there basically none? Are they, like borderline unsafe, or are they fantastic and it's absolutely a place you want to live? Okay, that's the condition. But when you're talking about the area, especially because we're talking about apartment complexes, the school districts where the property is located is going to be very, very important. As is for every kind of real estate, the crime rate where the property is located is super important. And then, of course, the last one, everybody in real estate always says location, location, location. It gets on my nerves because I think they mean traffic, traffic, traffic. And what I
Ah,
mean by that is if enough people go by any location every single day, it's going to automatically become more desirable. So the area and the condition, though, they're both ranked the same way as in grade school, where you have A plus at the top, and then it's A, and then it's A minus, and then it's B plus, and so on. So, Linda, as far as you and your organization goes, what's easier to say yes to?
yes, to in terms of like which one is the most important out of these three?
Just what's your buy box? Like, what
Oh,
are the
just the buy
particulars? Yeah.
box. So I'll go over what you mentioned. So first, in terms of market, I would say top five in that order would be Rosenberg, Texas. If you know where that is, I'm highly impressed. But it's our actual backyard in the suburbs of Houston. So Houston would be number two. After that, San Antonio, Austin, because again, we're close enough. And we came from the Midwest, me and my husband. So Madison, Wisconsin would be our fifth option here. In terms of size, we're looking at anything that's above 50 units, ideally under 125, just to make sure that we get our first deal at something that's a little more manageable on our end. But we're not scared to go big. Again, operations is what we deal with. So we've managed deals close to 400 units. Um, and so, yeah, so that's for the market and that's for the size. And then in terms of desirability, I like how you put that. Definitely C2B units, C2B properties, sorry, anything where we can add value. So the perfect property would be something that's like a C plus that we can kind of get on the B side as soon as we can. Definitely in something that's like the path of progress, like you mentioned, if it's an area that is not quite B yet or not quite A, but everybody for some reason is going there and it will be there in 5 to 10 years. That's definitely where we want to be looking for sure.
Mhm. I love it. I love it. Great answer. And then my next question has to do with people. And my favorite thing about commercial real estate is that because it's multifaceted, nobody's going to be all six sides of this die for any meaningful amount of time. Everybody's going to hone down on one or two roles, probably two, that and they're really going to get good at that. And one of the things though is that everybody has their own unique skill set, and everybody is eager to build these new teams, but we're better off helping some people more than others because of those skills. Me personally, just because I've been around for a while now and I'm doing the behind the scenes tech and the marketing and the content creation, it really means that I'm not in the market for just straight bootstrappers. You have to have something established already. So I tend to be most eager to speak to the sponsors and KPs because they've already got that foundation of a real estate business that I can make a disproportionately large difference. But when you're first getting started as a local or repositioner of some sort, you need people who are putting in 80, 120 hour weeks. And that's just not where I'm at my most effective. But Linda, I don't know if you have any 506B deals going on. If you do, don't mention them specifically, especially if you're going to mention financiers. But who on the die are you most eager to speak to? Who do you think you can help the most?
Sponsors and KP for
Sponsors.
sure.
All right.
Yeah, I think that we're equipped right now to bring them and you and anyone who's a sponsor in KP out there what they're looking for. We just need to know it. And that's where we're focusing heavily on meeting these people right now.
I love it. I love it. And then that has to make everybody ask, well, how do you reach out? And of course, I got this distinct last name right here, and that makes it really, really easy to find me on LinkedIn, where I spend most of my social media time. So I encourage you to connect there. But if you have your phone handy, and you scan this QR code right there. No, not the book that says real estate is a scam and realestateisascam.com. That's on amazon.com as well if you want. But if you scan this code, that goes to the FAQs page of 506 Me, which is the platform where I help out with the IT of the documentation for your substantive relations. So if you have all your documentation on your laptop, you drop it in the bathtub, well, if you get audited by the SEC, that's not going to be a decent enough excuse. And so we can help you out with that. Make sure that your bathtub incident doesn't impact your documentation status. But Linda, if people want to reach out to you, I don't know if it's phone, email, website, or social media, what's the best way to reach out?
Yeah, for sure. So I'm also on LinkedIn under Linda Holtz. It's funny that you say your name is remember like you can remember it enough that it's easy to find on LinkedIn. My maiden name was actually crazy. So when I got married, it became so much easier to be like, oh, now you can actually spell it. If I just tell it to you, you can spell it, you can find me. Before I had one of those names where it's like, there's only gonna be me, but I don't know that you're gonna know how to spell it. So
Yeah, I
yes,
can relate.
definitely on LinkedIn, on Facebook as well. My name is the same. Otherwise, feel free to text me, call me. I don't know if I should give my phone number right here, but if I can, I can definitely provide that as well.
Sure, yeah, you absolutely can if you want to, or if you want it in the description, I can make that happen. A lot of other
Yeah,
people have put their phone number on here, and I like that at least people had to jump through the hoops of watching the video to find out. So go ahead.
I definitely agree with that. And watching until the end too. So I like that. So my phone number is 347-605-8748. So New York phone number, I'll never get rid of it. So hit me up.
All right, beautiful. And that brings me to the last thing. It's actually not for you, Linda. It's for you in the audience. It's my public service announcement. If you've been watching this episode and experiencing searing pains in your eyeballs and like migraine-like symptoms, I'm confident it's because of the downright hideous subscribe button that's just down there, and you can get rid of it for free. So I don't know why you're putting yourself through all of that, but full disclosure, I am motivated to get you guys to hit the subscribe button because if enough people do, then YouTube will actually start to pay for these videos instead of me. And I think that would be amazing. And the trade off to you, just so we're clear, is my videos may show up on your list of suggestions, but frankly, you can ignore those suggestions because I just really appreciate the fact that you spent this time with me. Just like Linda, I appreciate you joining me today. This has been great.
Thank you. Yes, it was awesome. Thank you so much.
Awesome. Hey there. Are you interested in commercial real estate deals? Would you like to build your network of investors and deal sponsors? Well, the best thing I can do for you is have you appear on a chance encounter interview as featured on dandoesdeals.com. You may know me from 506 Me or as a top commercial real estate voice on LinkedIn. And if I had to think of the top factors in your success in commercial real estate, my top two would be your network and your ability to effectively explain how deals work with effective communication. The 15-minute chance encounter format, it checks both of those boxes, and they ensure that you can share your private deals with me without the SEC calling it a public solicitation. So hop onto LinkedIn. You can see my name is over here, Dan Friedenberg, and search for my name. And the best way to reach me and book that is to message me through LinkedIn. And don't worry, it doesn't matter if you decided to enter this space just last week or 2 weeks ago, or if it was decades ago. It'll be fun and easy to look good. We're just asking multiple choice questions based on your core competencies you look to contribute, your level of sophistication, all that kind of stuff. So I hope to hear from you soon. Thanks a lot. Bye. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506BME, everybody.